Pretty wild start to the day. Wanted to quickly recap the CPI data report that was released today. I wanted to break it all down for those that are maybe a little bit newer to the market. I also wanted to show you a position that I just closed and now I'm reopening my short position. So I'll add another 500 shares short, meaning that as Nvidia begins to sell off, if it continues to sell off, I'll actually make money as it sells off. If it begins to indicate signs of an uptrend, even more than what it already has, and at that point, I'm going to have to either reduce or cut my losses. One thing that I did during today's live trading session is I began to open up my short position on Nvidia as it began to rip down. At one point, Nvidia was up like 3.5, 3.6%. It's been doing this day in and day out. Right when market opens, it skyrockets. It becomes very overbought within a short period of time and then quickly corrects itself. It did it today. It did it yesterday. It did it the day before that and the day before that. Again, patterns tend to repeat themselves. They don't always have to. Nvidia has really strong rallies, but it just doesn't hold at those areas. There's too much sellers. Too many sellers. And with what the report was released today, I just wanted to share that with you guys that, again, there's a lot of volatility, quick changes of direction. I personally love trading reversals, so I love moments like this. And kind of just like what we saw down here, also it became very oversold. There were signs of a support. It was coming back to retest previous support range. I called out the support on Nvidia, and then I went long on it. It came back to retest previous pre-market resistance. So I locked it in, and now I'm opening, I opened my short position. Just so you can see, I just opened it. I have 1,000 shares. My average purchase price is 106.16. So I literally just opened it right around this general range, and then I'll add more to it if and only if direction becomes favorable. But quick little disclaimer, I do trade with over $250,000. So please make sure that you take that into consideration when comparing your green days versus my green days. I don't trade options. I only trade shares, and I do trade with a decent dollar amount. So please just make sure that you're aware when you see my green days. With that being said, CPI data report came out 1 hour before the market opened, and the expectation was 2.5%, and we came in at 2.5%. Core CPI came in at 3.2%, so unchanged. Core CPI was the only one that's kind of stayed stagnant. Remember, core CPI is what the Federal Reserve really likes to pay attention to. So we saw a 0.2% increase in the month of August, and you can see here, the blue line that you see here are all items showing 2.5%. And then this kind of purplish line, I don't know what you want to call it, this purplish line is core CPI, and that came in at 3.2%. If we go down the list, remember these reports are super easy to read. It's these line items that never change. So this is what's being tracked if inflation is going up or down month after month. And then they go from June to July. And then this month we just added August. So pretty much it's just asking the question for food. Did food price go up or down in the month of August? Remember, this is being released in the month of September because the month of August has to complete itself and then it gets released. So you go down the list, and one of the biggest drops that we saw when it comes down to inflation based off of this report is either utility gas pipe services saw a negative 1.2% drop, or we saw I think it's fuel oil saw a 1.9% drop, and the biggest increase that we saw was transportation services, a 0.9% increase. And again, you can see that right on over here. 0.9% increase was one of the biggest increases of inflation that we supposedly saw for the month of August. So it's pretty, I mean, if you take into consideration what we came from, previous CPI or previous inflation rate was 2.9%. So we went from 2.9% now to 2.5%. Remember, the target for the Federal Reserve was 2% flat. So overall, CPI is doing a really good job actually coming down. We went from 9.1% at 40-year highs to now 2.5%, working our way to 2%. So again, when asking the question, what's the big focus for the Federal Reserve? Remember, the Federal Reserve had a really big fight as it was fighting inflation, and that was the only focus. The CPI reports were very significant. I don't know if you guys have noticed, but kind of even like today. Once this report came out, we had an expectation of 2.5, but we came from 2.9. So we did see the drop that we were expecting on our inflation rate, but nonetheless, the market didn't really react. And this is one thing that we talked about a few days ago. Right now, the big focus for the Federal Reserve is not so much inflation because they kind of have it under control. if you've noticed. So that's not really much of a focus. It's more of the job market. How is the job market doing? What's our initial claims and continuing claims? That report gets released tomorrow. How's our unemployment rate? How are, non-farm payrolls? Those are all things that the Federal Reserve is really paying a lot of attention to when it comes down to how aggressive they might want to be and also the influence that it might have to the overall market. It's the labor market that the Federal Reserve has really shifted their focus to. And I just wanted to make sure that I expressed that so you can do more due diligence and learn more on why the Federal Reserve has such a big focus on the overall job market. The one thing, it was a statistic that was shared just back in the past, from the time that the Federal Reserve starts cutting interest rates in its past, unemployment starts to really pick up. We'll see if that happens this time, but it's definitely going to be something that I'm going to be paying attention to. There supposedly was a weakening in the labor market, but we'll see in the months that follow if by the time the Federal Reserve starts cutting interest rates, if we actually start to see a stronger or weaker labor market. But remember, the big focus today was that CPI data report and to try to make sure that we can get a better understanding of what the Federal Reserve is going to do next week when they decide to cut interest rates. Is it going to be by 0.5 basis point, so 0.5%, or by 1/4 basis points, 0.25%? So again, this most likely focuses on the idea that we're going to be cutting interest rates by 0.5 basis points because our inflation can support it. So we'll see what they actually end up deciding to do. I would love to keep you guys up to date. Just make sure you subscribe to the channel and drop a thumbs up. And remember, if you ever want to tune on into my live trading sessions, that's going to be the second link in the description down below. I like to keep my trading simple. I like to focus on direction, and you get to see all of my good trades and all of my bad trades within this live trading session. I don't trade live just once a week or once a month. I do it live every single day, right at market open for about 30 minutes to an hour. And again, if you want to tune on in, that's that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.